Welcome back. As the Federal Reserve is set to raise interest rates by 75 basis points for a fourth consecutive meeting, let's bring in Yahoo Finance's Alexandra Semenova for more on what this could mean for the economy moving forward. So 75 bits priced into the market, all kinds of conjecture on the presser, but what should we be expecting?
Yeah, Jared, unlikely that we'll see any surprises on Wednesday. Markets already pricing in that fourth 75 basis point rate hike, which will bring the federal funds rate to a range of 3.75 to 4%. Now, the key thing for investors will be what Jay Powell says in the post-meeting press conference and the accompanying policy statement. Wall Street will be looking for some insight about what they can expect in December. Now, some Federal Reserve officials have raised the possibility that at one point it will make sense to talk about slowing the pace of rate hikes as we reach this inflection point in the economy, and especially because their impact is a bit lagged. Economists at Goldman Sachs actually said that they expect Chair Powell to hint that the FOMC is likely to slow the pace to 50 basis points in December, but it's unlikely that Powell will outright come on and talk about any kind of policy shift. It's still too early, and December is a bit of a coin flip at this point. If we keep seeing economic data that surprises to the upside, like JOLTS today, manufacturing today, we could get another 75 basis points in December, but it also could be 50, it could be 25.
So let me get this straight, 75, 50, or 25. Didn't hear 100 in there, so maybe that's good news for stocks, which could be bad news for stocks, the way we interpret these things as well. But what about that pivot? We've been talking about that. It's something that seems a little bit more distant off into the future, an actual pivot, but maybe just a little bit of softening is what the market is expecting.
Yes, so the consensus is that they'll start discussions about a pivot in 2023 and at least about slowing the pace of hikes. But Wall Street keeps pushing back against this idea that a pivot is imminent. We have the big banks certainly pushing against that idea. Goldman Sachs, even though it's projecting a 50 basis point hike in December, actually raised its forecast to another 25 basis point increase. So we're looking at 50 in December, 25 in February, and 25 in March. In addition to that 75 point hike tomorrow, it actually raised its federal funds forecast to up to 5%. Bank of America, JP Morgan also saying that the Fed won't pivot until into 2023. And this is because the reality is inflation is still high. It's well above the Fed's target of 2%. We still got that 8.2% figure in the CPI print.
We certainly do. We got some more figures ahead, but everybody stay tuned. We're going to bring this to you live tomorrow in about 26 hours, something like that. We'll do the math tomorrow.